Okay. If you watched Seinfeld, there is this one particular episode called the bottle deposit, right? So there are these two guys, Kramer and Newman, right? They find out that in New York State, you get 5 cents a bottle. Uh, uh, if you put your bottle or your can for recycling, you get 5 cents. But whereas if you put it for recycling in Michigan, you get 10 cents a bottle, right? So they realize, oh, there's a great opportunity here that we will take bottles and cans from New York and go sell them in Michigan, and we will make a profit out of it. So that is an explanation of arbitrage, right? You take something from one place and go sell it in another place where you can get a much higher price. Okay, and this is an example of a risk-free arbitrage. Okay, so in the 1950s, right? Uh, there was this company called Rockwood and Co. Um, so what happened was this company was in a chocolate products um, company, and its inventory. So the price of cocoa beans went up from 5 cents a pound to 60 cents a pound. Okay, overnight. So and they used LIFO method, that is last in first out. So basically, in other words, what it means is uh, uh, so the value of their inventory went up 12 times, right? And they realized if we sell the cocoa beans to make profit on that inventory, we will attract a 50% tax. Okay. So instead, what they did was, they said, why don't we give away cocoa beans as dividends to our shareholders, right? And then the shareholders can sell them and make a profit. So this company was giving away $36 worth of cocoa beans as dividends per share, and the price of each share was only $34, right? So somebody like Warren Buffett, he chanced upon this and he pounced on it. So he would buy shares at 34, take the cocoa beans and sell them at 36, and he made a profit of, and I think he sold it around $100 a share, right? Roughly. So he probably made a profit of $102 per share, right? So these are arbitrage opportunities which come only once in a while. But if you have turned on your inner that mental model to look for it, you will find what such opportunities. Okay, a similar example happened last year. There is this company called Majesco, and it was in the business of selling insurance software. Okay, and it sold its insurance software business to an American company sometime around July, August last year, right? And this company said that we will distribute. So even in the October 2020 conference call, they said that they actually came out with a very detailed presentation. They said with all the cash that we get, we are going to first do a buyback, and then we are going to do a special dividend. But all the cash would be returned to the shareholders, right? And if you did the simple calculation, you would know that close to about 1,000 odd rupees per of cash they had, right? And the price of that share was just 870 rupees, right? And so I've just listed down the dates here. So in October 2020, price per share was 870. So in July 2020, the price was even lower. Even after they announced the sale, the price was even lower than this. Okay. I have given October 2020 as a reference date because that was the date in which I actually came across this particular situation. And by December 2020, around Christmas time, they paid a dividend of 974 rupees per share. Okay. And assuming you kept it for another 3 months, you could sell the remaining share at 70 rupees. And today, the price of that share is 150 rupees. Okay. So now you bought it at 870, you got a dividend of 974, and you could either sell it in March 2021, or you, assuming you sold it today, you will get 150 rupees, right? So that's a net profit of 174 rupees per share. And on an annualized return, you will get somewhere close to 48%, right? So this is very similar to what Warren Buffett did, which is the arbitrage opportunity. Any questions, thoughts?
Because we'll take the yeah. Anyone has any question?
Yeah, Avdut, this side, just cautionary statement. I would like to caution on this. We have to, I think, because we have to look at management also in this case, whether we will get that dividend or not. Yesterday itself, we have come across one such situation. I will not name it, but we have got, people have got paltry dividend of 150 rupees.
Sure.
So we have to take into account, whenever one business is sold, we have to take into account the management behind it. Madhu Kela has a very famous statement: पैसा कितना आएगा उससे पहले सोचना है पैसा आएगा कि नहीं आएगा.
Sure. So, thanks, Avdut. I will address this in my. There's one slide on learnings and mistakes and so on.
Yeah,
I will address this. Yeah. So this is not a and that is what I mentioned here. You can see it right here. So the risks in such deals are, one, the deal that you're depending on does not go through. So which means that there will be a downward price correction. Okay. And the second is promoters get greedy and then they don't share the proceeds, right? So Avadut, I will name the company. So
I was about to say that only. You can name the company.
Yeah. So there is this company called Hinduja Global, and that company is sitting on cash of close to 3,500 to 4,000 rupees per share, somewhere in between that. Okay, per share, and the price of the share is 2,800. And yesterday the price went down 20% because the management did something like number two. So they gave out they announced a very small dividend for the shareholders, but in the end they announced that a lot of money could go to in the form of intercompany deposits.
I remember we discussed this thing a couple of months back or 3 months back, Vikas. We were discussing on this.
Yes, about 3 months
so the
back.
only reason I couldn't think of investing in this was that, looking at the past track record of the promoter, would you get the confidence that they will share the proceeds?
Sure. Same thing with me, Ankit bhai. Same thing. I didn't invest.
Yeah.
Right. So Vikas, before you move ahead, I think Saket has some questions. So Saket, you can go ahead. Saket? I think you are muted. Saket, can you hear me?
Yes. I think now it should be.
Yeah.
So, hi Vikas, how are you? Thank you for this presentation, by the way.
Thank you, Saket.
So my query is see, in arbitrage, the opportunities also come, and also the risk is always there. And same goes in long-term investing also. So basically, the opportunities are there and risk is there. And same goes for startup also. So in every investment, definitely there is some kind of opportunity and there is some kind of risk. What experience enables us is to understand the risk and mitigate them better in the ways that we do. So with your experience, I would request you to share some more thoughts on how you manage the risk, basically how you assess the risk. So every arbitrage opportunity or buyback or can anything happen that disturb the apple cart. But the experience enables us to identify कि हाँ यहाँ पे फंस सकता है, यहाँ पर इशू आ सकता है, जैसे कि GS में past promoter record का हो सकता है. So could you address some more जहाँ पर how do you assess this risk part?
Sure. So a lot of great questions, Saket. And seeing that noted investors like you have joined the call, it's only making me more nervous, Saket. So, but yeah. So,
So Vikas, I'm sorry I'm interrupting. So noted investors like you and Saket have recently joined Mission Smile family. So that itself makes us feel a little proud that we are in the right hands.
okay.
I must
So,
say, to be honest, we are all learning here and we are learning from each other experience. That is the only intention to be here.
it's a great
Definitely,
Saket.
definitely, Saket. I completely agree with you. Completely agree with. And we have many Mission Smile members. I don't want to take one or two names, but there are many people from whom we have learned, as in Smart Sync.